invest primarily in private debt, that we purchase loans from local loan originators, and where yields are still quite high, and we also sometimes directly lend, and we have about 20 shareholders, and that's what we do. To live from my own capital, and so when I was working for a big bank, I was making Swiss banker salary, but I was having US student expenses, and every additional capital that I had, I was investing this, save and invest, penny to penny. And when I left the bank, people wanted to co-invest with me. They asked me, do you have a fund? Can I invest with you? And then I just set it up. I just set it up, the fund, and cost cutting was the biggest priority when I set up the fund. So I would be able to sustain this fund structure, and it's been working from day one.
Light bulb moments when you were starting out as to how you wanted to do things. Are you going to grow your business any with more personnel? Because it is very, very lean at the moment.
It starts with the choice of jurisdiction. Which jurisdiction you choose, some allow you more, some allow you less flexibility in the functionaries and the service providers that you must choose for your fund. For example, Luxembourg is a very strict one. They would force you to take a Luxembourgish fund administrator, and there is monopoly power that comes with that, and costs, and importantly, loss of some managerial decision-making power, where you have to always negotiate with, say, a fund administrator that doesn't want to risk this or that, or doesn't want to go the extra mile unless you're paying him extra. Then it starts with the jurisdictions. Some jurisdictions will allow you more freedom, and then you can shop around in whichever jurisdiction you want for functionaries, and then you can find the functionaries that are more suitable to you, both on the cost, on the service, and on a personal level. And we even went a step further and programmed our own accounting software. Actually, it's very high quality and able to accommodate all of our investments, which are, a lot of them are private loans. Also, private equity can be booked into our software. Of course, mark-to-market securities and futures, everything can be booked into our software, and then we just take an accountant to administer the software. And this can also work if you're starting off. And now actually we're branching off to start another business to provide fund administration to startup funds for a very, very low cost. And that's a very interesting niche, that what I had to go through, seeing that the running cost, the biggest running cost to run a fund is the accounting. Of course, you cannot just make it go away. You have to have reporting, you have to have accounting, and that's actual hard work, and that's why it's costly. And that's also why we're beginning to provide this service to the market, where we can accommodate any kind of strategy for a very low cost and very high quality accounting and reporting to investors.
So that's quite interesting. You started off building a fund, but through your experiences, you're adding on another revenue stream, essentially.
Fund administration.
There you go. I want to touch a little bit more on outsourcing.
Scale to outsource, and just because the amount of people that I can reach, or my associates can reach, is limited. Okay, already the people that were potentially investors, then we already branched out and reached out to them, and that's where currently we're looking to outsource by partnering with third-party distributors, And that's tricky, We are still looking. We're still very much looking, and maybe we can discuss in the next section what are the tricks there.
Okay, so let's.
Looking back, I'm quite happy that I built it to be sustainable from day one. And going forward, any strategies to increase more the capital under management, and yeah, any kind of partnerships with family offices or third-party distributors, or yeah, anyone that can introduce us. We're paying finder's fees. This was our strategy to grow from the beginning. This is working just to a limited extent. It's also the people who invested early on with me, who had the inclination to tell this to their friends, who thought that they would be able to raise so much capital. Even that performance has been more than great. It's hard to do. There are a lot of psychological hindrances for people to move money, and most people are not the decision makers. There's a lot of gatekeepers along the way, and they only move money under certain circumstances. And performance or the assets or the strategy are not always, they are not the first priority. First priority seems to be some kind of excitement or kind of political, not political, but that other investors, other family offices must be interested in this for any one family office to move his money. Then it seems like you need, just like this game where you need to flip enough of them so all of them flip together. It seems to be there's critical mass in communication and in marketing this to make it happen big time.
I think that's